All right, let's dive right in. Today, we're breaking down a really bold argument that's making the rounds about Nvidia. It all comes down to a single, massive claim, that there's an $8 billion secret about to drop in their next earnings report. The analysis we're looking at says this could change absolutely everything for the stock. So the whole argument we're digging into today circles around one single date, August 27th. Now, according to this analysis, this is not just another quarterly report. No way. It's being framed as the day the curtain gets pulled back on a story that supposedly almost nobody on the market sees coming. So what on earth makes this one date so important? To really get our heads around this, we're going to break it down into 5 parts. First, we'll hit that main claim, the China catalyst. Then we'll look at the specific numbers and price targets they're throwing out there. After that, we'll zoom out to see how big tech spending plays a role, check out the so-called ripple effects on other companies, and finally, we'll touch on a few other names in the AI space that the analysis mentions.
Okay, let's get right to the heart of it. The entire thesis here, the whole shebang, it all rests on one huge variable. The idea that a massive revenue stream from China, one that the market has completely written off, is suddenly back in play.
This timeline is the bedrock of the entire argument. According to the source, you have this sequence of events. First, the H2O chip sales to China get banned. Then, you have this pivotal meeting that supposedly happened in July. And just 2 days later, this is the key part, the source alleges that export licenses were approved. This all leads right up to August 27th, the day this analysis claims the news becomes official and hits the market.
And here is the magic number, $8 billion. That's the estimated quarterly revenue from China that supposedly vanished because of the ban. The core idea here is that this $8 billion is suddenly back on the table, and, crucially, that it is not baked into any of the current financial models or expectations. And here's what that $8 billion supposedly does to the numbers. Look at the left. That's Nvidia's official guidance of 50% growth, the guidance they gave when China was off the books. Now look at the right. That's the projection from this analysis. You add that China revenue back in, and suddenly, that growth rate doesn't look like 50% anymore. It jumps to a massive 77%. The whole point is that the market is looking at the old number, but the real story is so much bigger.
So, okay, if you believe that growth projection, where does the stock actually go? Well, the analysis doesn't just stop at the story. It lays out some very specific price targets and technical levels to back up its case.
The analysis puts forward 3 different targets based on this China surprise. You've got a conservative target at $210, a more aggressive one at $235, and then there's what they're calling a moonshot target of $260 if the news is just a massive blowout. That represents a potential upside of over 42% from where the stock was when they wrote this.
Now, to support this, the source points to the charts. It mentions the price bouncing nicely off a support level around 175, with the first hurdle at 190, and then that big psychological $200 mark. But here's the kicker. It claims the forward PE ratio of 43 is totally misleading, because it's based on what it calls old estimates that don't factor in all that supposed new revenue from China. Of course, this Nvidia story doesn't happen in a bubble. The argument then zooms out to the rest of the market, and it focuses on the insane amount of money that big tech is spending, which it sees as the jet fuel for Nvidia's growth engine. Yeah, check out this number, $350 billion. That is the combined amount this analysis says the tech giants are planning to spend on AI infrastructure just in 2025. The point they're making is that a massive slice of that pie goes to one place, buying the kind of high-end chips that are Nvidia's bread and butter.
And who's writing the checks? Well, the source points to earnings calls from all the big guys. You've got Microsoft's Azure just exploding, Meta launching whole new AI labs, Amazon is talking about triple-digit growth in its AI business, and even Apple is jacking up its AI spending. All of this is presented as a tidal wave of demand heading straight for the chip makers.
This quote, which the analysis pulls out, pretty much says it all. You have one of the biggest customers on the planet, Amazon, flat out saying they have more demand than supply for AI chips. The argument is that this creates incredible pricing power for Nvidia, letting them, as the source puts it, basically charge whatever they want.
So the argument goes beyond just chip sales. It expands to the wider economy, framing this whole AI boom as a massive disruption that's creating a very clear set of winners and losers.
This is where the analysis sets up a really interesting contrast. On one side, you have the enablers, the Nvidias of the world. And on the other side, you have what this analysis calls an AI risk basket. These are companies in industries like digital creative software, website building, stock photos, that it claims are getting directly steamrolled by all these new generative AI tools.
And this chart is meant to hammer that point home. I mean, just look at the difference. You see NVIDIA's strong performance right next to the pretty ugly declines for companies like Adobe and Wix, which the source calls disruption victims. The argument here is simple. This is not a random coincidence. It's a direct result of this massive AI shift.
To wrap things up, the analysis is smart enough to know that not everyone wants to put all their eggs in one basket. So it offers a couple of other ways you could potentially play this whole AI trend.
The source flags two other companies here. First is ASML. They make the incredibly complex machines that you need to manufacture these advanced chips. They're like the ultimate picks and shovels play. Then there's AMD, which is positioned as NVIDIA's only real competitor, a company that could clean up if the demand for AI chips is so huge that even NVIDIA can't keep up. And you'll notice the analysis gives specific price targets for them too.
So there you have it, a really detailed, incredibly bullish case for NVIDIA that's built on this claimed $8 billion China catalyst, fueled by massive tech spending and creating disruption across the market. The analysis really does paint a picture of a perfect storm. But like with any argument this one-sided, it forces you to ask a really important question. What risks, geopolitical, competitive, or otherwise, might this super optimistic view be missing? And that's the critical thought we'll leave you with.